Welcome to another episode of Sustainable Sense. I'm your host, and today we are nearing the bottom of our investments checklist, exploring the realm of alternative investments. In this episode, we're focusing specifically on commodities and real estate. These investments are not only fascinating in their own right, but also play a crucial role in supporting a sustainable and resilient economy. So, let's get into it. Welcome to Sustainable Sense, where we invest in climate defense. You're in for our hot take on all things money, markets, and the environment. When we talk about investments, the stock market often dominates the conversation. However, diversifying your portfolio with alternative investments can provide stability and sustainability benefits that traditional equities might not offer. Two significant alternative investments we'll discuss today are commodities and real estate. Both have unique characteristics that make them attractive for different reasons, especially in the context of environmental sustainability and economic impact. So, let's start with commodities. Commodities are super diverse and can include physical goods such as precious metals, agricultural products, and energy resources. The main thing is that they're tangible. These tangible assets can serve as a hedge against inflation and currency fluctuations, which is particularly relevant in today's volatile economic climate. Investing in commodities can be done through various means. You can invest directly in the physical commodities themselves, or indirectly through exchange-traded funds, otherwise known as ETFs, mutual funds, or stocks of companies involved in the commodity production, or something called commodity futures, which we'll cover in future episodes. Precious metals like gold and silver are often seen as a safe haven asset. They tend to retain their value over time, making them an excellent hedge against economic instability. For instance, during financial crises or periods of high inflation, gold prices usually soar. The stability makes precious metals an attractive option for investors looking to protect their wealth in uncertain times. Another interesting commodity is agricultural products. Investing in agriculture supports sustainable practices and food security, which are crucial components of a resilient economy. Commodities like coffee, wheat, and soybeans are essential for daily life, and their prices can be influenced by factors such as climate change and geopolitical events. By investing in agriculture, you can potentially benefit from the price movements while supporting the development of more sustainable farming practices. Again, you can invest in agricultural commodities through mutual funds or ETFs. Then we have energy commodities like oil, natural gas, and renewable energy sources. These tend to be particularly popular. While traditional energy commodities like oil have historically been lucrative, they also come with significant environmental costs, as we've mentioned before. Quite recently, bigwigs like BlackRock have received media attention. The two biggest fossil investors, Vanguard and BlackRock, account for 17% of all institutional investments in fossil fuel companies. On the other hand, investing in renewable energy commodities such as solar or wind power aligns really well with sustainability goals. Renewable energy investments such as in First Solar and Sun Power Corporation not only contribute to reducing carbon emissions, but also support the transition to a greener economy. Now, a second type of alternative investment is real estate. Real estate is a tangible asset that has historically provided stable returns and acts as a hedge against inflation. Real estate investing involves buying properties with the intention of selling them for a profit at a later date. Investors can own one or more properties or pool their money with other investors into a fund that includes several properties. Investors can earn money when properties in the fund are sold, and may also earn income from the rental of the property while holding the asset. But beyond its financial benefits, real estate can significantly impact the environment and communities. Sustainable real estate investments focus on properties that incorporate eco-friendly designs and practices. These properties, often certified by organizations like LEED, which stand for Leadership in Energy and Environmental Design, are built with sustainability in mind. Investing in green buildings can reduce your carbon footprint and operating costs. Energy-efficient buildings consume less power and water, leading to lower utility bills and reduced environmental impact. Real estate investments also provide opportunities for social impact. One important consideration for real estate investors is location. Properties in regions with strong economic growth, good infrastructure, and environmental initiatives tend to perform better over the long term. Additionally, areas prone to natural disasters or with strict environmental regulations might require more careful evaluation to ensure sustainable investment. If you don't want to invest in physical real estate, one option is to invest in REIT. A REIT is a company that finances, owns, or operates income-generating real estate. REIT investors pool their funds to invest in real estate assets without having to manage or finance the properties themselves. REIT funds typically offer dividend yields of 4 to 6% and overall annual returns of 8 to 12%. One such example I think we're all familiar with is the Simon Property Group, or SPG, the largest retail real estate group in the world, owning premier shopping, dining, and entertainment destinations. You've probably been to one of their malls before without even realizing it. So basically, commodities and real estate offer diverse and compelling opportunities for alternative investments. They not only provide financial benefits, but also support sustainability and economic resilience. Whether it's through investing in renewable energy, green buildings, or community development projects, your investments can make a difference. What other alternative investment options would you consider? Let us know on our Instagram poll or check the poll below. So, thank you for tuning in today's episode. If you enjoyed this discussion, please follow us and give us 5 stars on your favorite podcast platform. If you have any questions or topics you'd like us to cover in future episodes, feel free to reach out to us on Instagram at sustainablecentspodcast, or reach out to us on Gmail at sustainablecentspodcast@gmail.com. Again, that's sustainablecentspodcast@gmail.com. We love hearing from all of our listeners and cannot wait to get to know more of you. So until next time, this is your host signing off. And as always, invest your cents in climate defense.